Hey, what's up, everybody? This is Chef. Hopefully, everybody's having a great weekend. And again, we're gonna be rocking this weekly watch list, right? So I apologize for last week not having one, but definitely we'll be looking at a few things here, and it's kind of very, very important for this specific week, right? Now, if you guys tuned in to the previous one, I kind of just want to show you guys where, where what we were looking for and what we were expecting, but definitely both sides to the coin. So we got to understand both ways, right? So we did talk about this little piece right here. Okay, this was a very, very important piece that I talked about. Here we had a nice green candle, and I said we needed a retest. We got just that. This coming week definitely did not hold. So usually when that means when the retest fails, it's going to continue to drop. Okay. Now I can't tell you guys that I called this. I can't tell you guys that we saw this coming, right? Because in general, right here, this is where you would have bought the dip for a retest on this red candle. Unfortunately, it did not happen that way. There was a lot of volatility that came in with the Feds and FOMC and some like interest rates this week in particular that just passed. They're going to raise it by 0.75. So there was a lot of indecision and fear in the markets. On top of that, there's a lot of stocks that are breaking some major levels. So knowing that we have this, that this did not, the retest did not hold here. Number one is we are still downtrending, just like I said in the last video. We did not hold. So what happens when we do not hold? We technically drop into the next demand, okay? So first of all, the first target would be you'd be looking for this bottom, right? Did we hit that? The answer is yes. Would you consider this a double bottom like everybody else is going to be calling? My answer to that is no. Why is that? So most of the times when you see a break of a retest, like a failed retest or a break of a pattern or anything like that, especially with volatility, high volatility, there's I'm going to say like a 52% chance that this will not play out as a pattern just because the strength, okay, just because of this strength here, it's a lot stronger than that double bottom that you're going to have to consider or even talk about. So yes, there's going to be a lot of people that are going to talk about a double bottom potential. Bulls are going to come in, but I don't want to sit here and tell you that I can guarantee it. But there's a higher probability that this will not hold, right? Chances of it holding, like I said, I'm at a 52% to the bearish side and like 48, whatever's left of the other 52 for the bulls to come in. Personally, I don't think they will. But again, it's not about my opinion. It's about what the chart says and how it's going to break down or hold or break above, whichever one comes first. And whichever one comes first, then that's the direction that we're going to take no matter what, right? So I'm going to give you the levels here for the downside on this last hold, and I'm going to give you two targets to the downside. That's all I'm really going to give you because we really don't need much after that right now. If you're on a 5-minute time frame and you're day trading the 1 minute, by all means, go by, by 5 points, 10 points. But I'm looking at the bigger picture, and I want you guys to see what it looks like on the bigger picture, so you have a general idea as to where the sentiment may be. Just like we talked about here, this candle was nice. It kind of held that retest, pushed up, but then the retest down again, did not hold 50%, and it just dropped. So here's the levels for your support, which is a 3680, okay? So it's at 79.78. We're just gonna say 3680, okay? And then you're gonna use that wick. Okay, let's make sure we get close to that wick. It's 3640. Okay. Now, if you guys see this dropping on down, right? I just said if we fail a retest, we're gonna go down to the next demand. This here is not a demand; it is a support. There is a difference. Okay. If you guys don't know, go back and watch the other videos, or just send me a DM or join us at Conservative Collectors and ask me questions. I am Chef, by the way. So the next piece is going to be 3508. Okay, right here. These two candle bodies. Okay, or 3512, or yeah, 3508. 3508 down to that candle right there, 3477. Okay, that's your next piece of demand. That is a retest from the all-time highs right here, from where we dropped from COVID. Okay, this is very important. This is why I'm mentioning this level here. And a previous video as well, I actually broke this piece down and I gave you guys the bottom here. This is important level because I think it's going to retest here with all the volatility that's going on, and we're not going to hit new highs by the end of the year, right? Unless something crazy happens and they say that they're going to drop the interest rate hikes. We're not in recession. We're not in inflation. And numbers are amazing. And then we'll see something like this by December. But that's not the case, unfortunately. We have like 3 months left for the year. Crazy enough. Hopefully some of you guys are agreeing with P&Ls. But that's all we have, okay? So this is the next piece. This is the actual piece that needs to get really retested. We never got retested here at all. So that's what I'm saying. The failed retest is going to flush through this double bottom that everybody's going to be calling out. And we're probably going to hit this by the end of the year. Or we might end up here on this piece, right? So this is a very, very important piece right here. Okay. That's the levels that you need specifically for us to maybe end the year. We're probably going to go from that 48.08 and then end down here at this like 32.70. That's what a lot of people are going to be looking for on the bigger time frame. This is a weekly chart, by the way. If you guys don't know, I'm not telling you guys to grab put leaps. I'm not telling you guys that we're going to end up way down there at around that 32.80 level, 32.50, whatever it is. But that's a possibility, okay? The way that the market is going, the way that the economical catalyst is happening, it's really affecting it very, very negative. And there's a lot of stocks that are following towards that negativity. So again, remember that these are the only 3 pieces that you really need. Here's your breakup support, potential double bottom this week, which I highly doubt. And then you have that retest of that 35.05 and then that 34.70. What did we say? 34.77. And then we have this bottom down here of 33.27 and then 32.67. So this is going to be your retest. This is technically your COVID retest. That's the way that it's going to happen. So like this, okay, COVID retest. So this is your COVID retest from where we dropped all-time highs, then we flushed, and then we made a clear V-shaped recovery, which was amazing. I hope everybody made tons of money there. And at the beginning of the year, we just been downtrending ever since. But this is the only piece where we created a strong demand that hasn't been properly tested. And this is also a little more, slightly less than 50% of that whole move. I wish we would actually hold right here around this 36, but who knows? This market is just pretty beat down. So technically, yes, failed retest, breakdown, potential double bottom. It's going to probably fail. And then we're going to drop into this 34, what did we say? 34.77 and then 35 area, right? So just be aware that those levels may potentially come pretty soon, okay? So this is all I'm giving you guys. This is all you really need for the weekly time frame. Other than that, so you can drop on the 4-hour or the daily or the 15 or the 5 or the 1 minute, 30-second chart, whatever time frame you are on. And if you are trading those time frames, just make sure that you're following the proper steps here. You're grabbing the, the previous low, the little bases here. You're grabbing this piece down here, and you're watching it pre-market as well. So use those pre-market levels. Again, I've made these videos before in the past so you guys can be successful. All you got to do is go watch the pre-market levels and day trading strategy videos, just so you guys have an idea as to what to look for. So anyways, we're going to go look at a few charts here. Now that I broke down /ES for you guys, it's going to be the same for NQ and R2Y. Just look for the next demand, right? I don't need to go through every single thing, just so you guys can see the next pieces, but just know that everything is still bearish and everything is dropping, right? So for the first one that I want to point out to you is the XLF sector. The XLF is the financials, and it looks like this one is giving up a lot, okay? And it's kind of important to see because want to point out right here again that we're right there at that COVID level and if we drop below this like 31 and 30.40, we're probably going to head down a bit lower down here. And there's not a lot of demand until we get to this like 28 level. Okay, so I'm just going to mark it for you. Where are you at? Here we go. So this is your next piece here. That's your next piece of demand right there for like a retest for like that 28 and 28.40. It could be a nice aggressive drop for a lot of the financials. So make sure you guys watch that. The financials got hit pretty aggressively during the past few weeks. And JPM is one of the big ones. This is the one that I've told you guys in the past to make sure you guys keep those alerts down here, right? I said keep it alerts because it's probably going to be a break of if we can't hold above. And this was the one that was on the watch list last week as well. The previous video, it was right here. And I said a retest all the way into that 120, and potentially 122 and 124. That never happened. Unfortunately, this dropped, came back down to this bottom, based out right here, as you can see this week, and then continued to drop. So now we're breaking a strong demand here, and we're continuing to the bottom. So JPM, if you want to check it out, weekly time frame. That's why I said keep alerts on the banks, because this thing looks like it's gonna collapse, right? This thing has like a huge gap right here on the weekly time frame that's never really retested. It kind of did here, but we still have room all the way to this like 103, 102.40. So we have room to there. So this could potentially lead into a big drop for JPM, and I know they're going to kick off earnings on 10/14. So again, next month. And banks can really be getting hurt because of the interest rates and all that stuff. But again, the interest rates do kind of help them because of loans and everything else, right? So they're making a little more money, but they're losing on maybe different areas and things that I don't know about. So that's for you to research. But anyways, that's pretty dropping. That's why I said check out financials, right? So I want to show how big important the financials are, because V and MA are also big ones. These actually just broke down this week, right? So I'm going to show you the bottom of the wicks here. These are the bottom of the wicks, and then these are the candle bodies up here, okay? The difference here is that we already gave up the meat of the bone. The meat of the bone, basically, nobody came in and bought. The institutions never stepped in down here. They tried to step in right at last week, but it never happened, and it dropped V. So now it looks like since we gave that up, right? So since you give up the meat of the bone, you're basically not getting filled with institution orders, no orders for like limit orders from investors. It's not happening. So this is technically going to start a new trend, and we could potentially head down, all the way to the bottom again and drop below COVID, right? This is your COVID. Unfortunately, we couldn't even base out. We couldn't even build anything there. And then now we don't have any actual demand until like, this little piece here. And it's like nothing either. So we're looking at the bottom of this, right? So we're going to look for 180 potentially. Maybe that's, but it's like barely hanging on, guys. Like it broke a major level, right? This is what I'm pointing out, what I said earlier about so many tickers in the market that are giving up a lot of their gains, right? So here, this one again, MA, V and MA, if you don't know, they kind of follow closely together. So there's a potential that these may drop some more. Finally giving up the meat of the bone all up in here at around the 320 to 322 area. And then it dropped here and it came back inside, it snapped back up, only to respect a nice downtrend here and then continue on down. So like I said, a lot of these don't have major demands or supports all the way to, way down here. So keep in mind the financial sector, okay? Check out BAC, check out the banks. A lot of these tickers are still dropping on down, just like I mentioned, even GS, even BRK, which is Berkshire. Berkshire still has room to drop as well. If this thing gives up this like 264, 263, this thing can drop all the way down here until this 230. So just an FYI, okay? Berkshire, Warren Buffett. So yeah, I think this can pretty much drop heavy if that collapses. But who knows? So yeah, so watch XLF, okay? The other one I want you guys to take note of is SQ. The reason it has my attention right now is because it was one of the few tickers that was green, and I kind of questioned it because everything was red on the past few weeks, but SQ was not. It actually had a nice green day, which is kind of cool. So if you're gonna look for any tickers that are oversold or anything, SQ would be the first one. It's only like at $50 per share. So I think maybe that's why it's bringing in a lot of attention, even though the market looks super bearish. There's charts that hold, through a lot of the sell-offs. There's stocks that are, being bought up by investors. So keep that in mind. The cheaper it goes, the better it is for an investor. And the cheaper it is, the better it is for that RSI to be oversold. And then it's a better bounce play for calls. Okay. So just keep that in mind. So watch SQ in the next week or so, and just play it day by day. If this thing continues to hold green, use whole numbers: 56, 58, 60, 62, 64, 66. Same thing to the downside: 54, 50, 51, 52, 53. To the downside, every dollar. To the upside, every $2. So just keep track of SQ. I think it's going to be a decent one this week. It's going to probably catch some attention since it made some new lows. And I'm assuming the RSI is like way down to the floor, right? The next one that I want to point out is Netflix. Netflix, I did talk about it last time, and I said that we were holding these levels here. And then we just blew all the way to the top, all the way to that 250, and then just started dripping on down, right? So make sure you keep your alerts around 220, 217.50. This is going to be a break of or a hold of, whichever one comes first. I don't care. Either you're going to buy calls down here or you're going to buy puts down here, whichever one makes sense for you, whichever one drives better. So far, it's respecting that range, even though the market's been trending down lately. It's been holding, so it has a lot of value. It has a lot of strength. Just keep that in mind. I wouldn't say this is weakness. I would say this is more strength because of that wick. So just take it day by day, right? And I will keep you guys updated in Conservative Collectors with these charts, just so you guys can stay aware. And these all levels stay the same, guys. They never change, okay? The next one we're going to look at is Apple. Apple is a big heavyweight, and just like we talked about the previous week, if you guys remember, go back and look at the video. This has not changed. This yellow line has not changed. I said that this was going to be a great dip buy, and that happened last week, and it ran all the way into that 158. Hopefully, some of you guys played it. And if you're playing the short side, congratulations as well. Midweek ended up dropping Wednesday, Thursday, Friday, and we're still right here at this level. People are going to say again, they're going to call it a double bottom. They're going to say this and that. But Apple is still trending down, guys. There is no proper demand for Apple except in this level here between 147.50 and 150. That may potentially hold, but it doesn't have to, just because the market is still bearish overall. So there's a higher probability that Apple just may keep on flushing all the way till we create another base somewhere. Just like we talked about last time, this was a staircase pattern. A staircase pattern does not hold demand, it holds support only. And the way that you trail it to the downside, all you got to do is look at the bottom pieces. These are your supports. Okay, literally, these are your supports. That's what a staircase pattern is. Whether to the downside or upside, that is your staircase pattern and your targets and your entries and exits. Okay, I don't know how to explain that even better, but just be aware. The next one is going to be Microsoft. Why am I pointing out Microsoft? Okay, first and foremost, last week we were at a weekly demand right here at this 240. Okay, 242, 241.50. Sorry, and we did not hold. The thing about it is that this is a weekly time frame, and we closed below. So here's my thing. Okay, so now that you know this, all right, where's the next support? Okay, that's what we want to look for, next demand. It's going to be this 230. Okay. Yeah, 230. 230. And the lowest, right here, 220. We're going to say 224. Okay. 224 and 230. Keep those levels. Don't stay away. Don't not put alerts on them. But keep in mind. Look what we have here. Okay. I actually swung this and I ended up taking profit here. I got in Monday here and I took profit here. It was a little intense, right? If you're still holding, then you're red. But either way, Microsoft's kind of just chilling here. So look, we created a base. Okay, that's number one. We created a base at a weekly demand. Did we hold? The answer is no. Did we get a retest? The answer is yes. Did we hold? The answer is no. Okay. So what do you look for next? You look for the next move. The move, number one, we created a base. Did we drop? Yes. Weekly level? Yes. Bearish or bullish? Bullish. Did we get the retest? Yes. Did it fail? Yes. Where's the confirmation? Here. Okay. Here's your confirmation. Did you guys catch that? I hope so. If you didn't, please rewind it and pause it as I speak. Now, what's next? Check this out. 238 right here. We're not going to hold anything below, right? If we are 238, right? This is your level, 238 and 237.50, okay? I'm going to use that wick. This is a very, very simple explanation. What is the sentiment right now? Bearish, 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 right? Breakdown, retest, confirm, continuation. Boom. I'll see you down at the bottom. If Microsoft decides to hold this weekly level and decides to somehow, go green because the market created a double bottom, then Microsoft is going to go long and we're going to go back up into that 245. Okay. First level is going to be that 241.50 and 242. Otherwise, we're still down, bearish. So into the coming week, what is it that you want to look for? You want to look for a bullish market? You want to look for a reversal in the market? Or you want to look for a bearish ticker? The bearish ticker with all the confirmations that you need, that's going to make you comfortable to take a put position, is right here, right in front of your face, Microsoft. Very clear breakdown, retest, confirmed, and continuation down, or come back up to 245 with a green potential double bottom market. That's it. Otherwise, we're still coming down. I will see you around 230 or 224. That's what I will see you, Microsoft, and I will be in puts for Microsoft. If I have to swing it, I will. I am 100% comfortable holding this because all the criteria for this says bearish. Is that cool? Hopefully you understand. If you don't, like I said, rewind it, pause it, and listen to it again. The next one is going to be Twitter. Okay. So this one caught my attention. Now it is a small ticker. And I think that it's worth checking out. The reason for that is because, again, show you here, right here on this watch list right here. It's green. It's green while the whole market is red, and green while everything is just, dying basically, okay? Check this out. Look where we are, okay? This is what we have. This is all you need, okay? I need you to draw these two trend lines right there on the 4-hour time frame and have some fun. I will leave the rest up to you. I think this pattern is amazing. It goes for any size account, whether you're bullish or bearish. Just wait for the break of that trend line. Remember that anybody who's looking at stocks, anybody who can pull up a chart that has candlesticks, not Robinhood charts, that has candlesticks, can definitely look at this pattern and say, hey, I am going to trade this on the break above. Hey, I am going to trade this on the retest. It's either you're going to get the break above here and go up, or you're going to come back down the next day and get that retest. Or you're going to wait for that failed retest and drive it all the way down here. Or you're going to be that guy who's going to buy the break below here, or the one who's going to get the retest the next day. Whichever one you are, I hope you know how to trade these patterns. I hope you know that these trend lines are going to be watched on by everybody around the world who has stock market charts that have candles and wicks and all that and have a 4-hour time frame. Just an FYI, it's going to be all eyes on me for Twitter. Okay, so y'all have fun. Check those contracts. Take it for a swing trade, a day trade, a scalp trade, a swing trade, whatever you want, and make some money. If you don't make money on Twitter, then I failed to do my job here and I did not provide you an A+ setup. Okay, all right. But I gave you guys V, I gave you guys MA. So the next ticker that I want to look at is FSLR. FSLR is a solar ticker, and it looks like it's been trending very healthy. The difference now is that now I think it's ready to drop, okay? I was really hoping this thing would drop like 2 weeks ago. I did mention it on the watch list. I did post it here, and I tried to short it. I think it was like around here. I tried to short it. I ended up taking a profit for like a day trade, but then a swing trade ended up going south, and then I got stopped out. And then I played calls somewhere around here. I forgot where. So I made a little money back. But overall, I'm waiting for the reversal. What do you do when you wait for a reversal? You wait for a nice trend up. You wait for a consolidation period. Hold on. Consolidation period. Here you go. My question to you is, what are we looking like right now? Okay. Consolidating. Here's your trend up. Here's your consolidation at, let me just show you. At a weekly time frame level. Okay. Look at this. Nice doji, nice red candle. This is the start of a potential reversal on the weekly time frame. On top of that, the confirmation is going to come here on the 4 hour. What am I going to look for? I'm going to look for the next candle to look something like this. Like this. This is my target down here. That's it. That's all I'm looking for right here. So I'm going to short FSLR. All right. As long as we are below 130, I am thinking bearish. I don't care if we're at 129.04, 128.60, 128, 127.30, 126.90. I don't care where we are right here. As long as we're below 130, I am bearish and I'm writing puts all the way to this bottom. I don't know how much more clear I can be that with this specific chart. It's an A+ setup. If you don't make money off of it, then I don't know what you're looking at or if you understood it. All right. Above 130, it's calls all the way into that 138.70 and 140, but I will not be trading calls on this. I will be looking for the put side. As you can see, all my alerts are set, and then I have that one way up there just in case it does make an all-time high again, but I don't think it will. So yeah, this is going to be a very, very easy play. Be careful on the spreads though; they're very wide. If you don't have a big account, big enough account to handle the emotional entry because you may be red right at the entry point, then don't trade this. If you do have an account for this and you do have the patience and you're not emotional, then have some fun with FSLR and let's look for a short position back all the way down to 75 or whatever. Well, let's short this bad boy, right? Now, last one, it's going to be mRNA. Okay, I want to point out something here about mRNA. It's about COVID. Before COVID, this thing was way down here. Okay, it was worth about $60 to $50. Nobody really cared about it until COVID hit, and then for like a year straight, this thing went to the freaking moon. Literally went to the dang moon. Got pumped up, and now it's a dump. Pump and dump stock. Okay, just so you guys know what a pump and dump stock looks like, is that's what it is on the bigger time frame, and that's what it means for a stock to go back down to its original value, which the original value is about $15 to $50 per share. Now, the other thing I want to mention is that Biden did mention I think like 2 weeks ago, he did say that the pandemic is over. Congratulations. Nobody is buying Moderna anymore. And also gives you a great opportunity to short this bad boy. Why? Because now you're going to drop down, like I said, to your weekly levels. And on the 4 hour time frame, this thing looks like a nice short and still probably going to continue. Next thing you know, you're probably going to get one of these candles that's going to do something like this. You're probably going to get one of these pretty soon. Okay. But yeah, I am looking for a short below 120. And I want to be able to short it all the way down to like $50. That's what I'm saying. That's my TA for mRNA. I don't have much else to say, but if we do, you guys want to draw this trend line, make sure that if it does come up green right here in the next couple of days, just short that thing. Okay. That's all you got to do. Draw this trend line, respect that trend line. If it breaks above, stop out. If it comes back inside and fails at retest, then just keep on shorting it. Remember, nobody is buying these shots anymore. Just an FYI. Also, point out a different ticker, J&J. The opposite is here. J&J is a great company. They're not only just about the COVID stuff, but they are holding, they are green, and this is what caught my attention because J&J is more like a long-term thing. A lot of investors like to invest in this one because it pays dividends. And, if you check out your toothpaste and you use Colgate, you should, no, sorry, that's PG. Johnson & Johnson is the baby powder. But they do have a lot of other stuff that is like long-term stuff. So it's more of a investment. But either way, this thing held nice and great. And I have alerts over 167.50 and 168. I want to write it to like 170 and 171 if this thing continues to hold. As you can see, this did not keep dropping. So this is what I'm talking about. When you guys draw a trend line, keep it there and see what happens. Look at the way it broke up, came down, it failed, but then it came back inside. Okay, so now it's building that base. It's building some structure here. Okay, so all you gotta do is do this, build a little structure. So it's gonna be a break above that 167.50, 168, all the way to 170 and 171, or it's just gonna come back down to 164 and 163, and then potentially drop on down below. So just keep track on this. All right, all you gotta do, draw a little line right here that tells you to set some alerts, and that's where you buy long and that's where you take profit. Or you just wait till you draw this little line and then this little line down here. Okay. So I'm making this as simple as I potentially can for you guys so you guys can take some amazing trades. And then puts, target, puts, let it drop. Okay. So yeah, this is a very small ticker as well. So you guys should have fun with it. Other than that, guys, I hope you guys are checking out some tickers. SQ is another one. This thing broke demand. Like I said, just pointing out some tickers that are breaking major demand, and a lot of bearish tickers. So whatever you guys do this week, please be careful. Don't try to short the bottoms. Okay, whatever you guys do, don't buy puts at the bottom. If you're buying puts, buy it on a massive green candle. Okay, and stop out right on top. Because I've seen too many people try to buy the bottom at puts because it broke below. You should be buying on green candles. Okay. But yeah, and there's gonna be a lot more volatility coming in this week. They're gonna talk about some more interest rates. They're gonna say recession. You're gonna see headlines that are gonna say market is crashing. You know, the worst drop since I don't know whatever back in the past. But remember that the economy is a little bit different. Everything is so different. So try not to compare so much to the price action as before. What you want to look at is the volatility now because there's a lot more people trading here in general than in the past. Okay. So keep that in mind. Other than that, guys, stay green. Please manage your risk properly. Don't oversize. Careful on those IV on the put side. You're paying high premium. And if you're holding calls, don't bag hold. Okay. Whatever you guys trading, don't bag hold. Okay. Take it easy. Take it day by day. Be patient. If you take 1 or 2 trades, you should be good. Don't overtrade like crazy. Don't think you're gonna make tons of money all the way to the downside. Okay, we're not gonna go down to 200 like everybody's saying. If we do, then cool. But if not, then whatever. Take it day by day. You're a day trader. Most of you are day traders watching this video, or short-term swing traders, and you're not investors just yet. But yeah, good luck. Stay green, guys, and I hopefully you guys make money off this watch list, because if you don't, then there's something wrong. See you on the next one.